Can an individual trader make money in a sideways market? Hi there, I'm Laura Mandaro at MarketWatch in San Francisco. I'm here with Ben Brinneman. He's an instructor for C-Squared Trading. That's your own company. You
Right.
basically teach people how to trade for their own account. And you are a former bond trader who moved over into stocks
Right.
during the credit crunch and have sort of had a successful run. So I'm interested in maybe some of your favorite tips. First of all, so you can't really bank on a trend one way or the other these days. What are some ways you can make a profit?
Well, it's interesting. In this market, we're kind of headed sideways fundamentally. Maybe not technically. The market's kind of all over the place, and people are getting frustrated with the up and down movements. But the biggest thing that we try to do is that we ignore, the up and downs, the crazy up and downs, and we just try to focus in on certain stocks that are basically breaking out. So a breakout is defined by a stock that is hitting a resistance level continuously over and over and over, and then at a certain point it breaks over that and goes into kind of like there's no resistance and it has like a gap that it needs to fill in the chart. And so at that point, if there is volume, then you want to make your entry and you want to put your stop in the spot that it was bouncing in between as it worked up to that point where it broke out.
So it's sort of a limit to the to the trade.
Yeah, so that you don't risk a ton of money.
Now, we were talking, and you said that you had been in Apple at about 50.
Right.
But that in general, when you're trading for your own account, you're trading for stocks under $10.
Right.
What's that all about?
Well, typically institutions don't get into equities that are under $10. They're considered penny stocks by the book. And so they want to stay away from those because they would move the entire market in that certain stock if they were to get in. So a lot of times that what we try to do is we try to be smarter than the other trader. And so what we want to do is there's a ton of traders in these little stocks, and we want to outsmart them and stay in the ones that are under $10, but also not be manipulated by the institutional flow of money that can really move you in or out of a position, or market makers watching that more closely if it's a $50 stock than if it was like a $4 stock.
No, but you do look at when the big money comes in as a catalyst.
Right.
So can you tell me about that? And then do you get in and then get out because now you're playing with the big boys and that's a little more dangerous?
Right. Well, when the big, quote unquote, big money comes in, it's going to, obviously, if there's one trade that goes off in a $4 stock, or a few trades that go off, and somebody's buying 100,000 shares at a time, I want to be in that. Because if I'm already in it and that kind of institutional money comes in, then the big boys can move it up and you just join the ride. When the stock stops moving up, that's where you get out. And the way you determine that is that from the point that it broke out to the point where it had ranged before. So like let's say it was bouncing in a 50-cent range and then it broke out, you would count for that next area of your exit to be 50 cents higher.
Right.
So if it was 11, it'd be 11.50 where you get out.
Okay. And what trades have worked very well for you lately?
It's a combination of a short squeeze, which is where people that are short the stock or they're betting against it need to buy to get out. And the stock has what they call low float. So there's not that many shares outstanding. So any amount of shares that are purchased cause the stock to go haywire. And so one stock, for example, that I got long was PEIX, and I got in at 71 cents on a breakout from 68. And I got in 71, there's a ton of volume. And yesterday it traded at $1.80. In 1 week it was up 400%, but I got out like $1, and I was happy with 30%. But it went higher, and that's just what it does. Now it's going to trade probably all the way back down to 5 cents.
Not a lot of people in that stock, so when it makes a move, it did so dramatically.
Right. Well, not a lot of, yeah, exactly. And so when people were getting in, there was just a ton of buying going on, and the average volume was maybe 500,000 shares to 1 million. The day I was trading it, they traded 7 million shares.
Right, okay.
So I want to be in that when there's volume.
Okay, 30%, not bad these days. I've been talking with Ben Brinneman of C-Squared Trading with MarketWatch in San Francisco. This is Laura Mandaro.